As midterm elections approach, you might wonder what will happen with the stock market. Here to answer your questions is President and CEO of KUSI Asset Management, Brent KUSI. Brent, good morning.
Good morning. Good to be here.
Yeah, always good to have you here. So what should people be anxious going into the midterms? Does the stock market fluctuate much?
Whether they should be or not, they are. And they're concerned about the recession. They're concerned about, oh, somebody new is going to come in that's going to change this. And the thing that people look at is they let their emotions take over. And there's a thing that we call recency bias. Because things done poorly in the past, you think they're going to do poorly going forward. I'm happy to report that's not going to happen. Things are going to be changing. And people also get confused on the economy, politics. That really doesn't have a lot to do with the market. So what we did, we looked at going back 60 years. Well, how has the market done 12 months after the election, the midterm election? And now, normally before the election, the S&P is down about 0.3%. This is very important if you remember this, 0.3%. Year to date, we are now down 15.3% on the S&P 500. Now, why is that important? Because going forward, the average stock market performance on the S&P 500 over the last 60 years, 12 months later, it's up 16.3%.
Okay.
So good news.
That is
so you shouldn't be negative. Now, I know people are saying, oh, but I'm a Democrat, I don't like Republicans. I'm a Republican, I like a Democrat. That doesn't matter.
Okay.
What matters is the performance before it started. Because, and I went back again, looked at the best years, like actually President Kennedy in the 60s, he had a split house. He did the best. He was up 30% 12 months later after the midterm elections. And I say him, but his administration. And what we look at is that, well, how did he do before that? Well, before that, the previous 12 months, they were down, I think it was like 12% prior to that. What's most important is what happened the previous 12 months and then who gets in office the next 12 months.
So, as an asset manager, you watch this midterm election. If the Republicans flip the House, how does that affect the way you, as an asset manager, handle your clients' money?
I mean, you'll have to invest a little bit differently, but it doesn't matter whether the Democrats retain the House or the Republicans get into the House, because it matters on what it did the previous 12 months. Now, if you do have the Democrats retain the House, you want to be into like green energy, communications services, healthcare, technology. Those do well with Democrats. So if they retain, that's where you want to be. But if the Republicans get in, it's a different story. Then you want to be into energy companies, financials, defense. So it doesn't matter who gets in, it matters what direction you go. And actually, went back again 60 years. Now, there's 11 different sectors we looked at. Of those 11 different sectors, if Republicans were in, 55% of the time, it was positive returns. If the Democrats were in, not quite as good, it was about 36% of those sectors were positive. So the Republicans generally seem to be more business friendly. That's why generally the markets do a little bit better with Republicans.
Now, if the Republicans were to flip the House and the Senate, does that change things? That
does help a lot. If they get the Senate and the House, you could probably see a stopping of the spending that we have, which would help. You would see taxes not increase. They're differently. And what we have, and I know people hate Democrats or they hate Republicans, we have a good balance. And that's what's proven throughout the years. So I do have my favorites who I want, but it doesn't matter because our system is so good. It will balance itself out. And this is why you can't day trade. And this is why I tell people, do not get out of the market because you think Democrats are going to be in, or Republicans. Do not get out of the market. It's going to fix itself. What's more important is what you're investing into. And I will say the S&P 500, I do worry about it because it was, we've talked about this before, how it's concentrated on 5 companies. Those companies like Microsoft and Google and Amazon, they've come down, but they still account for a big part of the S&P 500. I think going forward, this can be more of what we call a stock picker's market, to where you have to know what you're buying. The index is not going to do as well.
Okay, that makes a lot of sense. A lot of sense. Appreciate it. Do you have any seminars?
Yes. Actually, we do. It's going to be our last one for the year. We've been so busy on done one, so we're going to do one November 17th, 6 o'clock in Scripps Ranch. It's a free workshop, easy to sign up for. Just go to our website, smartinvesting2000.com. Again, smartinvesting2000.com. And we'll talk about all this stuff and how to make people smarter investors.
Good deal. All right, Brent KUSI. Always good to see you, Brent.
Good to be here.